I wanted to say thank you to Linda and the rest of the team there at Realty 411. Hi, my name is Dave Seymour. I'm sorry I couldn't be live and virtual, but I did record this for you guys, and I'm super excited about building the relationship with you and also building that relationship going forward with the rest of the team at Realty 411. So let's get into it a little bit. Look, you might recognize me from the hit TV show Flipping Boston. I was out there for four seasons, 29 episodes. We had a lot of fun while we were out there. Great exposure for the company, great exposure for house flipping in general. Put me on some pretty cool places. Street Signs, CNBC. We got to do some great stuff on the Today Show with Hoda and Kathy Lee, Rachel Ray, all of that stuff. So, but look, at the end of the day, it's not about me. It's about you. What is your journey? What's your plans? I've flipped them all. I mean, I really have. I've taken ugly houses and made them beautiful homes, and we've made a very nice profit in doing that. But at the end of the day, it's still a job, isn't it? If you don't flip a house, you don't make any money. It's as simple as that. And although it's a well-paying job, it's still a job. So as we've transitioned, I would ask you, what does it feel like to have cash flow, but passively, cash flowing towards you rather than away from you? Somebody put that to me many, many years ago, and it resonated. And I have spent the past 7-8 years of my career realigning my own journey to be in a position where I can not only have cash flow for my own family, but share that with investors, with other educators, so that there is a motion, if you will. There's a lot of challenges in the marketplace right now. And look, let's just be frank. They are crushing some people's dreams. So what does it look like to be able to get out there in the marketplace and do things a little bit differently? And look, don't get me wrong. I love flipping houses. I'll flip one when I know the numbers are a no-brainer, but it's still a job. So at Freedom Venture Investments, that's who we are. We are a boutique real estate investment company. We focus on cash flowing assets that put money in the pocket of not only us as a company, but as I said, also as our investors. You can go to freedomventure.com, freedomventure.com. You can learn a little bit about it. So let's get into it. Look, active income, right? Trading time for money, whether that's wholesaling properties, whether that's rehabbing properties. Like I said, it's still a job, all right? And, some people will get into that line of work because a $30,000, $40,000, $50,000 payday is a pretty substantial amount of money. What could you do with that, right? Could you pay off some debt? Could you potentially pay for a child's wedding? Could you take that vacation? All of the things we've talked about. But for me, what I did is through my career as a firefighter, paramedic, construction worker, I accrued a lot of debt, right? Incurred a lot of debt. And what I was able to do was to get out of debt by doing that active work of wholesaling properties and rehabbing them and selling properties. But then I learned along the way, maybe you resonate with it as well, is that there's something beautiful about what we call mailbox money, right? The checks coming in. Let's be honest, there's a bunch of crap, isn't it? There's no such thing as mailbox money anymore. It's all direct deposit. But, what's it like to go to bed on the 31st and wake up on the 1st with more money in the bank account than there was the night before? And, Warren Buffett talked about that. Having passive income is really the way to real wealth. And focused a lot of time on that, and excited to share it with like I said, with students and other operators in the marketplace. To have a group of do consulting with people and share with them one-on-one the power of passive income is incredibly rewarding, and become collaborative instead of competitive. I'll say that again: collaborative instead of competitive. That's what the world of cash flow looks like, right? Working together as a team to bring that money coming in to compete against the amount of money going out. And we know that's a challenge in this marketplace. And then look, at the top of that equation, if you will, or if you made a pyramid out of it, is that legacy income, compounding profits, the ability to pass on not only what is learned, but also what is earned, right? Not only what is learned, but what is also earned. That's the legacy, right? If you look at the Seymour family tree, it goes straight up, and then all of a sudden it bifurcates off into a different strategy, if you will. My father was a great guy, don't get me wrong, but he only ever taught me how to trade time for money. And at the end of the day, especially in this economy, for me, it was a loser's bet. and I needed to get involved with this. So what does it look like for us at Freedom Venture? We create passive income and capital growth through commercial real estate. These are some renderings of projects that we have in various phases and stages of development. You know, these, think of them as, you know, 106 houses, for example, Cape Vista, top right-hand corner. It's 106 units that are passively paying income into the company and then passing that that profit margin down to the investors that come in on these projects with us. Bottom left-hand corner there, that's our new office build on McGregor Boulevard in Fort Myers. So we love the idea of multiple income streams, either through one asset or single family assets, because now we can start thinking about the assets are paying for the expenses instead of, right, the time for money JOB concept that so many of us are familiar with, right? Indoctrinated, for one of a different term. But how do you get into that game, right? What are the barriers to entry? It's very simple. It's not super complicated in the sense that the barriers to entry have always been time, money, energy, experience, knowledge. You know, no like big light bulbs going off there. But if we could leverage other people's skill sets, what could that be like, right? We can't all be experts in everything, right? The person who says, if you want a job done well, you got to do it yourself, never became financially independent, okay? They never reached that goal because it's always been a leverage game to be successful. Now, smart leverage, other people's money, time, systems. I love that. Save yourself time, energy, money, and stress. Knowledge. You know things that I don't know, and I know things that you don't know, right? But what if we shared that knowledge? Great, but now implement what we learn. And that's where a lot of I don't know whether you agree with this or not, but I think there's an epidemic going on, not COVID, but the epidemic of people starting and not finishing, right? It's easy to start. It's easy to log on for a webinar. It takes effort to actually participate and then implement what you learn. So knowledge, experience, and network, leveraging all of those components going forward. So I'm in the commercial real estate world. I teach it. I consult on it. I consult on raising capital. I put investor capital to work at high yield targeted pro formas. So that's the world I live in. So what does it look like to get through that world? Well, we got to find properties, manage construction. We take on the lender relationships as what's called a GP, a general partner. We take on those relationships for our LP, limited partners. We deal with the insurance agencies, the certified public accountants, property management. My partner, Walter Novicki, says frequently, we do 100% of the work and we give away 70% of the profit to our investor pool, right? So not a bad game if it's a good fit, right? Not a bad game if it's a good fit. So what is a good fit, but more importantly, what is a good deal? We like to look at probably around 2,000 deals a year for us to execute on 10 to 12. 50% of what we look at is off market. We're the ones getting the, what do they call them? Pocket listings, right? We take those down. But we like to look at the bottom left-hand corner of this analysis sheet, for example. A napkin analysis looks at price per square foot, capitalization rates, cash-on-cash returns, debt coverage ratios to make sure that a deal is a good fit. Now, some of this may be familiar to you and some of it may not. But each of these data points or points of capitalization create a story for us. The cap rate, the capitalization rate is really what somebody expects to receive for a return investment in a specific market. If you're familiar with commercial real estate and what's happened in the past 24 months since the influx of capital into the marketplace, we've seen a depression of cap rates, meaning that properties are trading at 2.5, 3 cap rates. So that means a 2.5, 3% return on money. Well, how can you really get great yield if that's what things are trading at such low price points? High price points, sorry, low returns. So we look for markets where we see cap rates can assist us in doing well in the deal, assist us in passing profits on to our investors, right? Cash on cash return, debt service coverage ratio. Does the deal qualify for the bank? We know what's happened to the banking industry recently. We know what's happened to the cost of capital. All of these things are fluid. It's a very fluid market right now. And it's creating some chaos in the market, let's be honest, right? A lot of fear in the marketplace. And again, without being kitschy, Warren Buffett, what did he say? When everybody is greedy, be fearful. When everybody is fearful, be greedy. So we are doubling down, tripling down on our strategies right now in the commercial real estate world. So internal rates of return, value of money over time. And then I like to focus on equity multiple. It simplifies a pro forma targeted return profile. If I put $100,000 into an investment, when the investment is over and I get back my cash flow and profit and I make $100,000, that's a 2x, right? Double the investment of the principal invested in the beginning of a transaction. So that gives me a nice gauge of where a deal could be. It all starts with knowing what's going on in the marketplace, right? There are macro and micro markets throughout the US, and some of the big data and some of the micro data really drives the decisions that we make when we buy real estate, right? When we buy the assets that we take down. We look at the policies in the country, the demographics, migration, all of these numbers really can give us a prediction of the future. If we look at the massive amounts of COVID migration, the massive amounts of baby boomers downsizing in the marketplace, it really changes the need on the housing side. So I've got a huge demand profile right now for housing, massive. We all know this. Single family homes are overpriced. They go on the market way too quickly. All of these are challenges that we're dealing with on a consistent basis, right? So if I've got this data going on, I've got these challenges going on, how do I profit from that, right? I start looking at the other sides of the equation, supply, demand, and it begins to build a really, really good picture for me going forward. If we look at the government policy, they really deal with two things, taxes and spending. It's not only what we earn as investors, it's what we can keep, right? I am not an advocate for not paying taxes. I'm an advocate for paying only what I'm expected to pay and no more, learning the rules of the game. And as we know, commercial real estate is a massive opportunity for tax shelter through depreciation, cost segregation, expenses, etc. So the government takes care of the taxes. We got this migration, this movement of people. The government's on the taxation side, but they're also on the spending side. And that's where the problems really begin to happen for a lot of people, because when we look at the interest rates and we look at the money supply, it creates a picture which is really quite scary for a lot of people. If somebody is retiring on a 401k plan, if somebody is retiring on a government plan, it could be challenged. There's a lot of fear in the marketplace about retirements, which is why, for example, the self-directed IRA program that we use with our investors is one of our most used options, if you will, to be able to velocitize capital, because there's not a lot of confidence in what's going on, right? The 401k becoming a 201k, et cetera, et cetera. I'm not going to hit that pain button anymore, but we know what it is. But the money supply is also a challenge. I pulled this down. This was on March 28th of this year. If you look at these numbers, right, the US spending $6 trillion and change, and yet the income, right, the income side of the equation is 4.5 trillion. So that's a business. That's a business which is operating at almost what, $1.5 trillion consistently in the negative, right? Consistently in the red. Now, if that was your business or my business, we'd very quickly be out of business. But it's not the same, is it, for the government? It's not the same. What do they do to solve the issue? They raise the debt ceiling, and then they print more money, right? That's what they do. They print more money, and they've done this over and above what anybody ever expected to see during the COVID crisis, where every action has a reaction, right? There's a consequence to every action going forward. Kevin O'Leary on inflation, right? When you print $7 trillion in 30 months and put that into the marketplace without any transference of goods and services, what did you expect to happen, right? That's kind of O'Leary's look on it. And inflation has been crushing Americans, crushing middle America. You know, I don't know what the exact number is today, but inflation month over month is a 6%, rent inflation 8%, food inflation. All of these numbers are not ticking in the direction that we want. So where can you go for safety and security, right? Where can an investor go to be safe and secure? There's optionality in the marketplace. Of course, there's always crypto. That's a great opportunity, isn't it? Sorry, I didn't want to rub that one in either. But look, crypto is it's not my world. Maybe it works for some people. I'm sure it does. But you know, FTX, the CEO there recently, $8.9 billion just went missing. I don't know about you. I can't take an $8.9 billion hit. Doesn't work that way. So where can I go? Where can I go for safety and security? Where I can always keep my money in the bank, or can I? We know what happened with a couple of banks recently, the regional banks. So now the Fed is trying to consolidate, right? Trying to bring all of this under their one umbrella of control. And look, I'm not getting into the politics, but that kind of concerns me as well. So I've got bank failures, I've got optionality being restricted. The stock market isn't giving me the love that it used to be. So where do I go? Where do I go? Well, where I'm pointing us. I'm pointing this to commercial real estate, but I gotta research it first. I gotta understand each market individually to know that I'm doing the very best I can with investor capital. So we look for data points. We probably hit anywhere between 200 and 220 data points at any one time for our market research. Now, this isn't Zillow. This isn't the free data points. We invest tens of thousands of dollars, not hundreds of thousands of dollars in our data research every year to be as accurate and as confident as we possibly can. Because at the end of the day, that's it, right? It's confidence. It's confidence to know that the business plan, the pro forma, is based on experience, reality, and exponential growth, right? Velocity of capital. So we look at employment growth, unemployment ranks, economic base. We look at all these data points and it begins to build a picture for us. And the picture that we want to see is positive cash flow. We want to see equity and profitability, but we also want to see positive cash flow. Why, right? Why? It's not that hard to figure out. In this market right now, the yield for investments is challenged. There are international investors who have consistently been in a negative yield position. Real estate in the United States of America is still the #1 most risk-adjusted investment. Some analysts would say, obviously I agree with them, it's the #1 investment worldwide is U.S. real estate for consistency, risk adjustment. It's got a safety built into it going forward because of positive cash flow and equity over time. Equity buildup, tax benefits, like we said, forced appreciation through repair, appreciation through building, right? Building valuable assets in markets that are needed. We look at U.S. housing price index. Florida, the growth in Florida has been exponential, 20+%. Florida, Texas, Carolinas. These states are showing us so many indicators to say, get in there as fast as you can, as quick as you can. Year over year rent growth. 12, I think, of the top 20 are in Florida alone. Now, understand something. That rent growth that we've been seeing is, as of today, beginning to cool. It's beginning to flatten out a little bit. So, those investors that we're talking about 10-15% year over year rent growth through 2025, 7 might be seeing some challenges. So conservative underwriting is a critical piece of this because we are always looking to compound, right? Compound return, compound the capital working, velocity of capital. 1% return on money over 24 years is 127,000, right? 12%, which is a targeted number that we look for consistently in our commercial real estate deals. If that money compounds 100 grand year over 24 years, it's a different story. 24%, right? Internal rates of return are high. The deal makes sense. The supply and demand equations are screaming, go now, do it. You can look at some pretty substantial. What does retirement look like at 24 million compared to 127 million, right? It's a different game altogether. So we like market cycles because they are predictable for us. We only need to look backwards to know what's coming forwards. We look at sourcing opportunities. I shared this earlier. We go through marketing campaigns. We've got broker relationships, banks, asset managers, established large local investors work directly with us. And 25+ years in Southwest Florida, our market of choice, puts us in a really strong position when we're looking for deal flow, when we're allocating capital to land acquisition, to existing structures. We're ahead of the game. We also need to have a team. We need to have a business plan, as would you if you choose to do this kind of business model. You need the pieces of the puzzle put together to be able to execute on a business plan profitably. And the #1 skill, I'll just go right there while I think of it. The #1 skill is the ability to raise capital. Most people find a deal and then go looking for capital. We are always raising capital because when we get the deal, we know we can execute on it, right? It's chicken and the egg, one of those scenarios going forward. So sourcing opportunities for us is a consistent daily part of our business, obviously, but as is the raising the capital going forward. Once we got an asset, we got to know how to manage it, right? Manage the property, maximize its cash flow, its net operating income. We do that. We maximize the profitability of the asset. You know, get rid of the bad tenants, getting good tenants. I'm sorry, not bad tenants, challenged tenants, getting the less challenged tenants, some repairs, right? Forced appreciation. So when we do this, we have multiple checklists that we work with in our business to be able to hold our property management teams accountable. It's not just like trust and not verify. You got to trust and verify. And we do that through checklists and systems. The people that we consult with, the other operators that want our assistance, you know, they just cut and paste and duplicate our systems, our property management systems, our marketing systems, our money raising systems. It just, you know, it's experience. It's experience. We've already been there and done that. We create the system. If we do something more than twice, we create a system around it, and then we know how to duplicate and scale it going out. So commercial investment opportunities, Freedom Venture Investments, 9 billion in transactional experience, 10 million in square feet developed. I am the CEO, Dave Seymour. I've already introduced myself to you, but the guys around me, the team around me, is really what makes us who we are today. Walter Novicki, my chief investment officer based in Fort Myers, Cape Coral. He runs our offices down there. 30 plus years, I think, 30 plus in the Southwest Florida market in development and capital raising. Jackson Stith, new member of our team, brings massive amounts of large project experience to the team. So it's the ability to get the deal, not just one time, but every time, and then execute on that, putting the right construction teams around us, as I said, management teams. And then raising capital. We raise capital with both accredited and non-accredited investors. Non-accredited investors would need to have an established relationship with us. That can be a question through social media. That can be an email contact. That can be a relationship which is in sync. One of the things about raising capital that our clients and team members know without fail is there needs to be an alliance. It needs to make sense for both parties going forward. Accredited investors, the SEC determines them to be more aware, if you will, more experienced because of their earning capability. So having the ability to work with both is very important. And non-accredited investors usually invest in our fixed income fund, which pays 10% monthly on capital deployed. We'll share a little bit about that with you as well going forward. So raising the money, having the team to put the money in the ground or into the projects, and then executing on the business plans, and having all of these various components of the business running in sync is really the secret sauce that I would say is critical, right? It's critical to be in this volatile marketplace where we can sit out the recession, where we can sit out the inflationary environment. Look, if capital isn't working at a greater rate of 7 or 8%, is it really working at all, right? Makes me laugh to watch the banks come out with their certificates of debt, CDs again, you know, and now they're up to 5%. Ooh, why? Because the Fed raised the interest rate, right? So velocity of capital, high expectation of return profiles. These are the things that are going to be moving forward through the next phase of the market cycle. So we do this with Freedom Venture Investments, and we remove the barriers to entry. I've already explained that to you. Knowledge. If I wanted to learn how to do something, I'd go to the expert and ask them to teach me. I'd invest with them. I'd invest in their time, their skill sets, so that I could become the best I could be at that particular skill set. So leveraging our knowledge at Freedom Venture is what a lot of other GPs will do, general partners. They'll come into our consulting programs and they'll spend time with us weekly or monthly, depending on the structure. And then they gain that knowledge. They're able to use all of our templates. They're able to use our marketing templates, our offering templates. They're able to use our email marketing campaigns, our social media programs. They gain all of this knowledge. Can they go do it themselves? Of course they can. We're all intelligent people. But some people say, I don't have the next barrier. There is the time to go learn all of these things for myself when I can cut to the front of the line by leveraging other people's time and experience. And then the capital, right? The capital to do these projects is always interesting. Most people come to us, invest with us, and learn alongside us because they really want to hone in the skill of raising capital. You know, the very first time I raised capital was $35,000 for a construction loan on a flip I was doing. Then I borrowed $150,000 for a cash flowing asset. And the last deal we did is I now manage, a $150 million fund. We raised $6 million for an individual project. So how did we get across that trajectory, right? There's systems to all of it. There's processes, there's steps, knowing what to say, when to say it, and how to say it. It's what a lot of people spend their time with us. So the average LP investor can come in, learn the process, or they just come in and invest in the process, right? They like to put capital to work. We do that through passive income community, which is our consulting teams, education, raising capital, learning the business. And then some people like to do either or. They'll come in and they'll invest alongside us. So I'll show you a couple of the deals that we have in flow right now, give you a flavor and a feel, but also at the same time, pay attention to the visual. What does it look like to have a really strong pitch deck? These are some of the templates that we use in our business that we share with our consulting clients. So these are a couple of the deals. The Freedom Plaza, that's our office build that I shared with you, Cape Vista, 106 units. Southwest Florida is a build for rent Suncoast growth fund that we're raising capital for currently. And then the fixed income expansion fund that pays 10%. So this is just a smorgasbord of some of the deals that we are consistently have in flow, in process, in our pipeline. And as you can see, they're visually attractive, very important. People, some people buy with their eyes. Remember that saying? So once we get into the details and the numbers, yeah, that's great. If you look at some of these 2.6 equity multiple, 3.4 equity multiples, very aggressive return profiles. But build for rent is where we're spending a lot of our time currently. Single family build for rent markets, new kid on the block. And what we do is we'll use maybe an expansion fund to pay for the sorry about that. I don't know if you could hear that or not. We use the expansion fund at 10% to pay for the infrastructure that goes into these offerings. So that might be earnest money down, and then that capital is recapitalized at a later date when we go into the asset. So the expansion fund can cover that. Just a flow chart, if you will, what that looks like. Hold time 24 months, 10% per annum paid monthly on these properties. So some investors come in, they're not accredited yet. They can't get that larger return profile, but they still love the idea of a fixed income fund. And look, I've never been an advocate for this or that. I always say this and that, meaning real estate as well as the stock market. Get some value add, some core, some fixed income, right? Separate, spread exposure is a good idea. Our deal flow is very, very robust. All these properties that you see are part of the Suncoast Growth Fund that we have in play right now. About 1,200 doors across 8 different assets, 3 to 4 equity multiple is target out for our investor community. So a lot going on. It's all going on in Southwest Florida for us. The office build, capital stack on the office build. We get creative sometimes. We've got common equity, preferred equity, early in money gets an earlier distribution, if you will, or payment profile compared to common equity. So, we teach all of these ways of getting creative with the financing, not only for us as the GP, but also for our investor partners, because they all have different needs. And that's part of the real skill set, if you will, of learning how to raise capital. What would it be like if you could make, 6 or 10 phone calls, send out 50 emails, knowing that there was a high chance that you could bring in, $1 million? What would happen to your confidence? What would happen to your ability to buy good deals, better deals, bigger deals? It really is a skill set that I get such a kick out of watching it work as other people deploy what we teach them going forward. Fixed income, this is just a comparison slide between fixed income and expansion funds. So, it's creativity. It's all about creativity. So the problems that we solve, well, we solve the passive investment challenge. We solve that through being able to bring in investor capital into our deals. It gives a higher projected rate of return because money comes into our build for rent properties earlier in the process. So the money is working with velocity over a period of time. We solve the problem of having to go out and do it all yourself because we're experienced operators. I think there's around 70 years of experience at the executive level alone. It gives investors the advantage of participating in larger deals. If you're a hard money lender on one single family home and something goes wrong, all of that capital is exposed, right? So if 100,000 is now spread across 5, 6, 7, 8 different large commercial projects because we've combined and pulled that money together, that for some investors is a very, very exciting opportunity. The tax advantages are shared. And for our consultants that come in with us that want our consulting skill sets, they're aligned with us, so they get that credibility also for their business if they're beginning to either raise capital themselves or go out and syndicate or buy a larger apartment complex, for example. So I love the phrase at the bottom there. It's learn as you earn, right? You're earning in the business and learning at the same time. So I know this has been kind of a fire hose presentation, if you will. Like I've been loading it all out there. But what I would say to you is what would it be like to align and invest with a company like Freedom Venture Investments or another company? It's not all about us, right? We're not the only operator. But what would it be like if you had the confidence of knowing that capital is working in commercial real estate projects, following the trillions of dollars that are pouring into this asset class? What would it be like to know that you're in that flow, you're in that stream of income, if you will? What would it be like to know that you could learn from people who have gone through that process, right? We've made the mistakes, fall forward, fail often, and just learn from the failures, right? Pay for your own failures or experience ours. It's a choice. There's no right or wrong. It's just left or right. People are going to do what they want to do. So learn as you earn and participate with us. ir@freedomventure.com is an email. You can reach out there. Say, hey, I saw Dave on the 411 replay of the Philly event. You can text at 781-244-3804. Now that text number, if you text to that number, you are texting with the intent of setting up a quick conversation with myself or one of the team members to ask more about what is it like to be in our consultation program, coaching, right? What would it be like to be alongside us, to learn from us, to use our systems? I'll tell you now, it's less than $1,000. It's a couple of bucks a month after that to stay in with us. If it doesn't work for you, you're out, no worries, no issues. It's not like a $20,000 investment and some of the craziness that I've seen out there. And the reason that we price ourselves below $1,000 is, for me, the upside is having capital raising partners who don't always have deals. Well, I've always got deals. There's nothing wrong with having capital raising alliances of people who learn to raise capital with the same integrity that we do, and then make that alliance going forward. So, that's really the upside for us, if you will, going forward. You can also go to cashflow.freedomventure.com, cashflow.freedomventure.com. Here you can download probably our #1 white paper, which talks about investing in commercial real estate and its place in a balanced portfolio. This is a super piece of literature, if you will, that you can share with potential investors when you're raising capital. It just gives them some great knowledge. You can have that knowledge as well. Start sharing it, start building some credibility going forward. So text 781-244-3804. Do that now. Monday, I know that this is Saturday today. So on Monday, is the time frames available to talk to either myself or my team member, 8:30 to 2 p.m. Eastern Standard Time. So if you're on the West Coast, you might have to get up a little earlier for that conversation. Make sure you get a cup of coffee in you first. But there'll be quick 20-minute calls. So you need to do this. Text your name, your email, and the time within that time frame that would work best for you. First come, first serve. So you might want to shoot that text out now. Sit down with us at Freedom Venture Investments. Have that conversation either about coming in to our community, our passive investment community, and or coming in as a potential investor with us and look at some of our deal flow so that you can have the confidence of knowing that your capital is going to work through these next crazy times. So it's been a pleasure spending some time with you. I want to say thank you to Linda and the rest of the team. And that's about it. So I'll see you on the next one. Take care.